Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So checking in on our global markets this morning, Europe is up a bit. China's up about 2% after the premier said they'll support 7% GDP. And Japan up again, about 5% off its May highs. But turning to our markets, futures are up a little bit, and we are now just a pebbles throw away from 1700. Could today be the day that we hit it?
I think you stole my line with a pebble
I
throw.
I might have borrowed it.
So the question is, all right, everyone wants to get the papers ready for S&P 1700, this and that, but, unfortunately, there's not a lot of people, I think, celebrating. Unfortunately, this rally seems like it's been one of the most underinvested, underliked rally of all times, even though the trend's been your friend, even though leadership's been there, even though, like you said with the world markets, there's been opportunity across the board. You mentioned that the Nikkei was what, 20% off the highs a month or two back, and everyone was saying, "Oh my goodness, it's over, it's over." See, they burned their currency and inflation, blah blah blah. P.S. It's now almost back 5% off the highs, showing you opportunity. Even Japan, or actually even China, it's been the weakest index, and now they're coming out saying they're going to support 7% GDP. So perhaps buying that dip in the FXI, also made some sense. But here we are. You just go to the chart of the XPX, and you will see that there was an opportunity to buy our market, so on the dip, so to speak, as well. Here is your May 22nd high. Here is your move lower, only 6%. When we say when market's correct, you never know how far or deep it's going to go. That's why you measure the action. Right here is when it paused, and you had this move up into, remember, the end of that second quarter, and then digesting higher and taking the 50-day, put it back on track. And now here we are, closed right around 1695, and the question is, what do we do around 1700? Do we punch through? Do we get a little resistance? But overall, there's been a lot to like, and I just think there's only a matter of time, in 2013 for us to hit 1725 to 1750 on the S&P. Well,
and touching back on Japan, which is now has rallied about 15% off its lows, is there opportunity, would you say, in the EWJ?
I think there's less now. Now is when everyone starts getting excited after the bounce back. You look at the chart here, you'll see, you look at the EWJ, this was your outside day. We had the same type of day, May 22nd in our markets. Here was your decline, a lot fiercer than ours, because look at the size of the rally, almost 50% off those November lows, so 20% was really not that bad. Held above the 200-day. Even right here, when it crossed above this trend line, that was your spot. If you didn't want to buy it in the hole and you wanted to wait for confirmation, there you go. And now look where we are here. So I think at some point, it's going to retest those highs. You just have to be a little bit more careful buying up here versus, back down here in the hole, or when it crossed above this descending trend line. We also talked about the DXJ, which has had a nice move, not as healthy as the EWJ, and then also Toyota, which I think was right around here when we mentioned, if you want to get some kind of, Japan exposure, here was your outside day, here was that low, here's when it took back, or recrossed above this trend line, and like right back at the highs. Looking good, lots of opportunities.
Right, and regardless, it's been a very stock-specific tape this summer. The casino group has not been a leading group, but is starting to act a bit better. MGM has been best in breed in the group, but there are potential other setups developing. Would you say MGM is still the best?
I just think at this point I like the pattern, and it's a little cheaper, so it's easier to grab or put your arms around. For a lot of this year, I've pounded the table on two names, obviously two different sectors. One of them saying, buy MGM, put it in the drawer. I think that you could see even by 2014, 18 to 22, and then obviously Bank of America, a whole different sector. I said maybe 14 to 16 this year. But anyway, you go back to MGM and you look at this chart, a lot to like on the daily. First time it took off was right around here between April and May. You had a really nice move. It came back sharply to retest it, a V bottom. Okay, held higher. This was a nice entry, held above this. Latest entry, I think, was last week, about 15.95, and look how it's flagging again. So today, if it gets above 16.25, maybe you add for a little bit more cash flow. Then some will say, oh, well, look how extended MGM is. Not really. If you look at the monthly chart, look where MGM was. Look at the size of this channel. It has not broken out of this channel in, 4 years? So under 4 years, it's been under accumulation. And so I do think 18 to 22, is in the cards, or could be in the cards in 2014. So if you missed some of the rally of 2013, with patience, and you put it in the drawer and you have that risk, I think you get north of 20 next year.
Well, typically, it would be Las Vegas Sands or WYNN that's leading in the group, and perhaps they're not due to reports that growth in Macau has been slowing, but LVS, for instance, has been acting a bit better, was just able to reclaim its 100-day on Thursday.
Yes, and it has like a mid-level flag. So it's not leading, it's kind of lagging, but maybe with the news out of China, some of the Chinese names act a bit better. In the past, LVS and WYNN were the leaders because of the Macau exposure. Now they've been lagging because of it. So, that's what happens when things rotate. So you look here at the chart of LVS, not the best chart, but it's above the 8-21, reclaimed this moving average, holding above this little downtrend. So for traders who are not in it, if you're looking for some kind of cash flow trade above 56.50, it can continue. And then if they do come out with earnings and they show that Macau hasn't been as bad, then you have the high here of 60.54, which isn't that far away. And if you go to the monthly chart here too, you will see that if this group continues to get stronger at some point, perhaps next year, if it gets above this little double top above 60, next spot could be north or close to 80.
And how about WYNN? Similar to LVS, still has Macau exposure, a decent amount, but it has been acting better, the stock.
Yeah, this one too. In the summer, you look for things to do. You look for setups that are tight, that could expand. You look at WYNN. Here you go, not leading, but if the market continues and we go above 1700 and they want to find some kind of vehicles, this is a nice mid-level channel. So above this 134, then it gets back in vogue, and then your next level of resistance comes in around 140.40, and then you have the old highs here.
And Caesar saw a nice breakout on July 10th and has been flagging above the 8-day. It is reporting on Monday, July 29th after the close.
Yeah, so you have to know whether you're going to hold it for earnings. There's been a lot of, it's a very thin, shorted name, and I've traded it a few times, and when it moves, it moves. And if you look here at the chart, it's not for the faint of heart. Look at this nice wide range igniting bar when it broke this downtrend. From here, it's been going sideways to let the 8-day catch up. So if before earnings it decides to break out again above 1660, I would go with it, and then you have your highs here. If it doesn't go before earnings, wait till after earnings. You go to your weekly chart in this one, and not a lot of memories here. It's a new issue. It's been public, for 2 years? And if it were to, get above and stay above this 18, then when there's nothing to the left, the sky is the limit. So we'll see what happens here. Overall, though, acting better, and something if you could stomach it to watch and learn how it trades.
All right, well, coming up, we're going to go in the trenches with stocks that reported earnings yesterday and stocks yet to report earnings later today. But first, this quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with stocks that reported earnings yesterday and stocks that will be reporting later today. Let's start with Netflix, which reported second quarter earnings that beat estimates yesterday, but revenue only met estimates. Shares did drop in after hours trading. They've recovered somewhat, but do you think there'll be a play there today?
Well, I remember after hours yesterday, a lot of people were saying, think about what happened with Google. Google was down like 40 or 50 points. It went off the after hours lows that afternoon, and then the next day it almost went positive. So people are thinking that people like Netflix, the story's there. Granted, their earnings might not have been enough to take along into it, but there could be some opportunity afterwards. And now I think it's only down $7 or $8. You look at the chart here, you will see, this is where it was trading at the 21-day after hours around 240. Now I believe it's right around 250. So it's really right in there. So with that said, I would not just have short in the brain, but I'd be careful buying it. At this point, if it were to close only down $4 or $5 on the day, I would say that's pretty darn bullish considering the size of the move that this had. Just real quickly to remind you on Google, Google is down trading as low as, I think, what, it was like 860, even though it showed only 875 the next day. And then since it filled the majority of its gap, it continued to get going. And now look how close it is to the high. So don't have any opinions on what should happen with these earnings. Let the price action dictate. And right now for Netflix, so far, they're giving it a bit of a pass as it's only down, $6, $7 when, it's had such an enormous move.
Well, turning to later today, the big report will be from Apple. Analysts are forecasting quarterly revenue of $35 billion with EPS of $7.30. And clearly investors are looking for reasons to get excited here. So will a decent report be enough?
You know what? I'm really not sure. I've always get excited about Apple earnings. I usually have some kind of call spread on and ready to trade it. And down here, I'm like, you know what? I just don't know. The market's at highs. Apple itself, last quarter announced a huge buyback, the dividend. There was even some, more positive talk about their product refresh, which seems to get, pushed out. The only thing that's good is that expectations are a lot lower. Okay, so with that said, perhaps they do beat, and then we have to look at the guidance. You look here at the chart. It's been a devastating move for a lot of investors that did not stop themselves out at 650 or did not stop themselves out at 6 and just held their nose and went underwater this entire way down. So now you look down here, there is some type of accumulation pattern down here, but I wouldn't say it's blaring. So at this point, if you want to look at that a little bit closely, here we are. I would say after hours, if it comes out with a decent report and the guidance isn't that low, maybe it gets above 434 and I would just trade it after hours. And if it gets above that and maybe even clears this little downtrend, perhaps you finally get a reflex move. But if they're not exciting and there's nothing different or blockbuster and they guide lower, below this little 424, you could see a retest back at the lows here. Lately, taking options into reports has not been profitable. Even if you were right on the direction with Google, you didn't make money. As you could see, Netflix was pricing in a 35-point move. So if you bought either the puts or the calls, you're probably in bad shape. So I would say with Apple, don't be so excited to be in the options. Wait till after. And I think there'll be enough opportunity to not have the risk of the report. If you happen to be a crazy Apple fan and you think this is it, Tim Cook's finally going to deliver, don't go long the stock, do some kind of call strategy so at least your risk is premium paid. Right.
Still try to play it a little bit safe.
A little bit.
How about Broadcom reporting after the close today? The company is expected to report earnings of 69 cents a share. Broadcom has beat analyst estimates 4 times in the past 4 quarters, so if the company beats, maybe we'll get a boost.
Yeah, and right now it's at the lower end of the range. So if you look here at the chart, I don't think anyone's really expecting that much out of Broadcom. It's down here at 33. It's not up here at 38. It's been relatively weak. eBay's report was not eBay. Intel's report was soft. Texan was a decent bright spot. It's below all the moving averages. I don't think you do anything with this. If you're not in it, stay out of it. And if you're in it, you've probably taken enough pain where you might as well just stay in it and hold your nose. But if you wanted to, and as a trade, I would just wait till after hours. You have resistance at 35, you have support at 33, and I don't think there's anything compelling in there to actually do something with.
All right, and Panera also reports after the close today. We'll get a chance to see if this growth story is still hot. I'm wondering if actually we can take a cue from Chipotle, because Panera's first quarter results had been better than Chipotle's, and Chipotle bounced back from a weak first quarter.
Yeah, so this has been a strong group, and again, the options are going to have such a big premium there. It's hard to trade it even and make money if you're right. So, guys who traded CMG made some money after hours because it was a decent size move. And you look here at the gap, it continued, and even like now at CMG, there's probably some opportunity if it were to go sideways, hold the gap for continuation. And this one, pulled in a little bit before the earnings, had a nice gap up. Now with Panera, it's going to have to, deliver. You look at the size of this move in the stock; it has a lot priced in, so it's near these highs. If I would take some risk down, maybe do a collar here, where you sell some 190 calls for a certain amount and buy some puts, and then have some free shares if you've been trading this from the long side. If you're not in it and you're just looking for opportunity, I'd just wait till after the print. You're going to have enough time. And if you look here at the chart, at least you have defined levels here. If it were to get above this 192-ish to 190, like 192 to 195, you could get some kind of blow-off move above 200. But again, you have to be able to trade that kind of action after hours, which sometimes it's thin, wide, and easy to lose money.
All right, time for some quick hits. Let's talk Tesla, which gave a nice trade from the long side right off the open yesterday. Do you think there'll be something there today?
I don't think the setup here is as good as it was the past, few sessions. You look at Tesla, it's been a great stock, great trading vehicle. Here is when you had your exhaustion gap for a short continuation. Here is a day that, kind of held this trend, gave you an 80-20 red dog reversal, and then it tightened up. And yesterday, guys that were quick had a nice trade when it traded above this, 120.50 and then even above 122.73 before coming off. And now I just, it's kind of in the middle of this bigger range, and I guess use a 5-minute chart because it moves on 5-minute charts, but I still think it needs some time before earnings to set up a better, more clear-cut pattern to put some size in. I would just actively trade it, and I don't even see a really great active setup here like I saw the past few sessions, so it's not going to be on my A list today. All
right, how about Biogen? It's been a bit volatile. It is holding above the 21-day. What would you do with this ahead of earnings on Thursday?
Now, again, if you're going to be in there for earnings, you better, love the company because there's a lot of earnings risk. Yesterday, there was a report, sent it down midday just to recoup. So these bios are not for the faint of heart. I guess, it looked clean cut here. Remember when I showed you that day one? And then it came back in and held strong. And I would say if you're looking for momentum, it's going to have to get above yesterday's high. And then here you have the old highs. So this one, is very volatile. Guys are trading, and if you're trading it, make sure, you give it some room, and I wouldn't take a lot of size there.
And you pulled up Google before, but let's just check in on it one more time. It closed the day up 1.6% yesterday and is back above all key moving averages.
Yeah, and this one repaired a lot quicker. I was ready to put it in the penalty box and say, you know what, Google probably needs a month of packing and filling, and boom, 2 days right back and reclaimed all of its moving averages, and looks all set up again. So at this point, I wouldn't be chasing up here. I don't think, in a session or so, we're going to be clearing 927, but who knows? At this point, high level consolidation, still showing leadership. You had your, buying the whole after earnings, and then yesterday you could have even bought when it went above 902.95, which was that high for a future squeeze, I guess. Use 912.67. I think it's opening above there. If it were to trade back below it, maybe get a cute short, but cute short in Google can make you real ugly real fast, so just be careful there.
And JP Morgan has been acting a bit better, holding above its 8 days since breaking out last week. Do you think upside momentum will continue?
On the daily chart, it looks a little extended, but on the weekly and monthly, it still looks higher. This one, I'm long, with Bank of America. It cleared its little descending channel right there, and then it held higher, gave you a nice little breakout trade, and then it's been holding, digesting. So in order for it to continue, it's got to trade above yesterday's high of 56.67, and it can continue. I'd also turn your sights on Morgan. Morgan had earnings, and unless you were in it for the earnings, you didn't have much I guess much movement there. So now with this little 3-day range here, I would say if it can clear this 2780 to 2790 area, perhaps you get a little bit more cash flow there for Morgan. So both of those could be good for tactical cash flow.
And Molycorp gained 7% yesterday, broke above the 200-day. Do you expect momentum to continue there today?
Yeah, this one was one of those rare earth stocks that was in fuego years ago, and now it's like a treasures for trash trade. With the metal start to get better, there was some decent news out of China about the demand for rare earth stocks or their materials. And if you look here at the chart, technically it made a lot of sense. Here was your wide range igniting bar, then it held the top third yesterday, got back in vogue. I did play it here yesterday. I bought some, I still own some. If it were to clear this little resistance area here, I think there's no reason why I can't tag the 200-day at 838. You look at the weekly chart where this stock is, and it's absolutely nowhere. So it's had a decent move off the lows, but this was a lot more expensive back in the day. So who knows? Maybe it really catches fire and trends up to the north of 10, which this would be this spot right here, which is 1181. So make sure the volume stays there. I think there's an opportunity.
All right, well, clearly we have a lot of big earnings after the close today. What will you be focusing on as you head into the trading session?
How do we handle S&P 1700? Do the banks stay strong? Every time there's been this little small midday pullback, usually you see stocks, they don't pull back, so you'll know whether it's for real or not. Just trying to, I've been hovering between 4 to 6 to 7 positions, over the course of the past, week or so, trying to stay with the rally, but not fall asleep behind the wheel, looking for opportunity. There's been longs and shorts to, to trade. Earnings, it's been very specific, so you really need to know what company you're holding, when it's reporting, where it came from, and how it reacts. That's the most important thing. And just, it's summertime. If you miss this move, at this point, I wouldn't be over trading. I wouldn't go all frustrated, revenge trading, and losing more money than you need to. I would just wait for a setup, you're better off being at the beach than losing money at your trading desk, and getting a better head, in a better, mind frame in order to, regroup and get back involved in the market in a way that's a little bit more constructive for you.
All right, everybody, have a great day. Happy trading.